Good evening, everybody. This is Joshua Hayes at BigWaveTrading.com coming to you with your January 15th stock market wrap-up for you to use on January 16th session, or even to use it for next week. You can use it as a guideline. Let's go ahead and go over what happened today. Today was very positive. I'm actually very happy to see this. Now, why? Why am I happy if I'm so bearish? Well, I'm only bearish because I only just go with the charts. Long-term trend's down. Intermediate term trend is down. Sub-intermediate term trend from the November low is up. Short-term trend is down. So I'm going to go with the trend. The trend is down. However, making money on the long side is how I create great wealth. And that's how I did very well in 99 and 2002's lows to the 2007 top. Since 2007, it's been hard to make a ton of money. But I do know how to make a ton of money, but to make this ton of money, you need a very bullish uptrend or just a simple uptrend, and we don't have that right now. However, today's session with the S&P 500, as you see reversing on higher volume, would be a good day one to a new rally attempt. We would have the rally attempt necessarily isn't over, but there were so many distribution days within this rally attempt that IBD did kill it, and they have turned it into a market correction. And of course, the market's in a correction. I mean, look at the long-term trend of this thing. I mean, that's not nice. However, today's gains were very nice to see as it even closed higher than the open. And as you can see, 841.99 open, 843.74 close. Bullish tail, a lot of volume, but look at the volume overall. It wasn't that big, was it? It wasn't the biggest volume bar that you see in here. And look at last August in 2007. That was our last legitimate rally into the October highs, and that was it. It was over after that. And so this volume doesn't really give you the confidence that, oh, this is definitely a bottom. The New York Stock Exchange, of course, confirms this as the volume stats are the same as the S&P 500. You can see, nice day, but overall the volume's just above average. Nice, but overall to the previous volume, not that great. So we can't call this a capitulation reversal. Oh, the bears are wrong. Oh, wrong. No, because the past 4 sessions, the bears are still very, very right. So you got to give it to the bears right now. They're still in the lead. Let's look at the Dow Jones Industrial Average. And as you can see, it had a reversal. However, volume was much larger on this reversal than any day. I'm going to skip the Friday quadruple witching and go back to 1125. So it's been almost 2 months since the Dow Jones has seen volume like this. I gotta be honest, that's very good to see. And even the open 81.96 closed at 82.12, had a higher close. So overall, very constructive, just not super bullish, capitulatory bullish. As you can see in the NASDAQ, same way. Very big volume surge. However, it's just slightly around where the quadruple witching was back on December the 19th. So, but this was the biggest volume session since 11/21. So I got to be honest, excellent bounce day right here. Good day one of the rally attempt. But what's more important is what happens in the next 3 to 10 sessions. In the next 3 to 10 sessions, if it happens tomorrow and then the next day, this isn't good. You need to happen, day 2 of the rally attempt can be tomorrow, but then you would normally see a pullback on lower volume or a sideways action. And then from the 3rd to 10th day after this day, so not tomorrow, not the next day, but then the 3rd day to the 10th day, if the NASDAQ or New York Stock Exchange can rally on heavier volume, heavier volume, much stronger than the day before, and hopefully well over the 50-day volume average, I'll be very happy and ready to start picking off longs left and right. But you all should see in 4 of the 6 longs today, 3 of them did very well, and those 3 that did very well would be the 3 best performers, obviously, in our current longs. This goes out to a free audience, so I don't want to mention the names of them. But if you were long those stocks and you saw the gains of those today, that's what they're supposed to do immediately after we go long. Now, after we went long, a lot of these stocks pulled back but didn't break the support level. So we held on, and it's paid off. Now, while we did sell out of some of these, which something you got to do in a bear market when they don't act right away, we're still long some of them, and hopefully the gains will be big enough if this market does decide to rally here on out that we can make some money. However, if the market does rally, I'm expecting a failure at the 200-day moving average for most of these. That should then put a lot of these stocks that are on my short scans that we can't go short yet because they're down way too much from just where a rally would, just to still be short. A rally of 20% or more could happen, and they would still be in quote, quote, shorting positions. So they're not safe right here. They got to get back towards more of the 200-day moving average. So if this rally comes on lower volume, be prepared to short it whenever it ends, near the end. So if it's on low volume, I expect a higher volume reversal, and I expect all these shorts for you, for the subscribers that have been looking at these same short symbols that we've been looking at for the past month. We can't go short them because they're too scary right now. You're prone to a big major short reversal. However, a low volume rally to that 200-day moving average on a lot of these stocks, we got shorts. But during that low volume rally, the 6 longs that we have that are now breaking out to new highs that we have, they should do very well during that time if we have a rally. So I welcome a rally here, but I have a feeling that it's going to end up leading to more selling. So just be careful, everybody. Don't blow your wad all at once. You know, don't take, if you have like 100,000, don't put the whole 100,000 to work. Don't put the whole million to work if you have a million. If you have a million, put 10,000 to work. Put even 100,000 to work if you're really brave. But I would wait for a follow-through day before doing that. Then put 100 to 200, 300 to $400,000 to work. But unless there's a huge volume on the rally and we start getting breakouts in beautiful can slim quality longs and stocks sitting up in beautiful tight sound bases, there is no way that I would put a full million to work if I had a million, much less use 4-to-1 or 2-to-1 margin. So just keep that in mind. Oil, as you can see, dropped to 35.30, and as we can see, the lowest closing low on the current contract we have is 35.35. So it's near there. It got down to 33.20 intraday, and as a current contract, that's the lowest intraday total, as you can see here on this oil chart. So I might be wrong, by the way, because I don't ever look at the commodities on the other charts, but I'll go take a look. But I know that before in December, the front contracts got down to 33. Or the back end contract got down to 33, but the current one did not, so that's why on that one. Gold had a nice little day today as it was up down to 817 on a closing basis for the total chart. Nice support at the 50-day moving average. Gives hopes to the gold bulls that it will bounce here, retake the 200-day moving average. Then hopefully both the moving averages can tip back up and gold can move higher, and hopefully we can get some longs in the stock market to invest in. Platinum had a nice little reversal day today, as you can see, holding the 50-day moving average, and so is silver. And let's take a look at the CR Commodity Board Index, and it's still in a big downtrend, as you can see. So overall, still pretty ugly out there. But we do have 6 nice longs. 3 of them had excellent days today. And that's how every long I take is supposed to act immediately after we go long. So if we get a bull trend here and we get some nice charts setting up, which I got to be honest, there's not very many out there at all. To be honest, there's barely even 10, if that. So just be careful, everybody, and just know that we will be putting all of our money back to work one day. Right now just isn't the time. We have to tread cautiously here. Oh, one more thing to look at, just to show everybody, sorry, before I end here, is the dollar index. The dollar index, everybody tells me I'm supposed to be short. Now it's retaking the 50-day moving average again, and as you can see on a closing basis, it's above it. So the dollar is back above the 50, which means I wouldn't necessarily want to get short here. If it fails at the 50 and has a big reversal, and if on my Investors Business Daily charts the volume's higher, then we might want to get rid of the rest of our longs and maybe take a short position. But right now, there's no reason to go short the dollar, and there's no reason to go long the market heavily yet. So let's wait for the nice charts. But study those 3 longs. Look at the big price gains of those 3 longs, you current subscribers, and you will notice that this is how they normally act immediately after we go long in a bull market. You normally don't have a pullback back to the pivot or sideways action for a breakout. Normally there's a breakout, immediate follow through. Hopefully it's up 20% within the first 2 to 3 weeks, then another base or pullback, and then it's off to the races, and hopefully 100 to 500 to as much as 2,390% gain in 9 months in Taser. We can get that again, but hopefully next time I put it all in Taser instead of just some of it. But there were so many great stocks that did well. Just go review my past big winners, everybody. You'll really treat yourself to a nice little time during this rough patch in the market. Okay, everybody, part 2 is going to be up next for the subscribers. Have a great Friday. I'll be back tomorrow. Aloha.